it's a pretty amazing confluence of events right now. Just over the last month, the rate of hospitalization in terms of the number of U.S. hospital beds being occupied by COVID patients has been cut in half. And the vaccine shots, not the number of people, but the number of shots, has gone from essentially nothing to now 56 million shots. This is just for the US. Obviously, worldwide, it's more. And on top of that, we're about to get another 1.9 trillion or close to it of fiscal stimulus. And when you add that to the other bills that have been passed since the pandemic began, we're looking at over $5 trillion of fiscal. And we have a Fed, as you mentioned in your previous segment, that is very comfortable letting this whole thing run hot. So when I add all these things together, potentially reaching herd immunity at some point around the middle of this year, a large output gap getting smaller and smaller, strong earning seasons. It's really all about the reflation trade. And we can see this, of course, everywhere in the markets right now. You see it in bond yields, you see it in inflation expectations, you see it in the rotation towards value, small caps, non-US stocks, certainly including emerging market stocks. So it's a big trade. It's well known at this point. It's well discounted, but that doesn't mean it's about to end.
Sure, but why do you think that the markets are so worried about inflation and all that talk about tapering and exit policy being something in the works by the end of this year? Inflation might go up because of the base effect essentially midway through the year, but do you think the market is misplaced in its concerns about a structural rise in inflation?
Well, I think the market is betting on a cyclical rise in inflation. Certainly structurally, I don't know. I don't think anyone else does. If you look at what's happened in Japan over the past 15 years, the Bank of Japan completely monetized a 100 percentage point increase in debt, and the inflation rate is zero, the yen is stable. So this notion that something is going to go off the rails from a structural perspective, I'm not quite willing to go there. I'm certainly open-minded to it, but certainly cyclically, I think it's likely that we'll have some inflation. And I don't think it's something that the market is particularly worried about. I don't think the Fed is particularly worried about it. And here, it's important to draw the distinction in terms of the rise in yields. In terms of, is it coming from a rise in real yields like we saw in the taper tantrum 9 years ago, or is it due to a rise in inflation expectations? And so far, it is very clearly the latter and not the former. The 5-year TIPS real yield is still at around minus 2% and getting even more negative. So I think the Fed is okay with letting rates rise. I think the market is okay with rates rising. It's not going to disturb the rally as long as it's based on inflation and not on a rise in real rates.